It's nearing the end of the year, and what you do between now and December 31st can make a huge difference. We're talking thousands of dollars in taxes and hours of stress that you can eliminate if you follow this simple checklist. And whether you've been on top of your books all year long or you are still needing to catch up, this checklist will help you. And make sure to stick around until the end because I'm going to give you my extra bonus tip of the one thing that I always do before the end of the year, and future you will thank you for doing the same thing. Hi everyone, I'm Jamie Trull, CPA and financial educator, and here on this channel I love to give you all the things you need to stay informed, organized, and profitable in your business finances, so please make sure to subscribe. Today I'm going to share with you my own year-end checklist that I go through in my business to make sure that I am set up for a strong January. And whether you've had a great year or a tough one, now is the perfect time to pause, reflect, and get strategic. So checklist item number one is to understand cash basis accounting. Now, most of you are probably on the cash basis of accounting for taxes. What that means is that you are taxed when the income actually comes into your business, which may or may not coincide with when you actually earn it. So that means that if you've, let's say, done work for a client, and whether you've sent an invoice or not, you will actually not recognize that as income until you actually receive the money. So this typically for the rest of the year doesn't really make a huge difference. However, timing matters when we're talking about the end of the year, because that means that income could either land this year or it could land next year, just depending on when that cash actually hits your bank statement. And similarly, the same goes for expenses. So if you are deciding when to spend money, it can make a big difference for your taxes, whether you choose to spend it this year before the end of the year or wait until even just the first of next year. Now, you may think that the best strategy to reduce taxes is going to be to delay income, right? So maybe not collect on those outstanding invoices until next year, and perhaps move forward some expenses that you can deduct this year on your taxes. And that's a really common strategy, especially if you expect that this year you're going to be in a higher tax bracket than you expect to be next year. However, if you expect your business to be growing significantly next year, you might actually want to do the opposite. Maybe this year's tax bracket is especially low for some reason, and therefore it makes more sense to collect more income this year and to delay those expenses. So this is a really great time to be looking at this year and what you expect for next year, and to consider that timing and what's going to make the most sense overall from a tax perspective. Again, don't over-index on just this year's taxes because that may come back to bite you next year. Now, the second thing on my year-end checklist is to make charitable contributions before the end of the year if I want those to be part of my taxes for this year. Now, importantly, even if you're making these contributions from your business, it's important to note that if you are a pass-through entity, meaning you're a sole proprietor, LLC, S corporation, and not a C corporation, then these charitable deductions actually get passed through to your personal income taxes. They are not deducted from your business. So the negative part to that is that you're not going to necessarily get the full benefit of all of your charitable deductions unless you itemize. Now, if you're watching this in 2025, unfortunately, you do need to itemize in order to be able to deduct your charitable contributions. That means if you take the standard deduction because that's better for you, you're not really going to get a specific benefit for those charitable deductions. However, starting in 2026, you will be able to deduct $1,000 if you're single or $2,000 if you're married, even if you don't itemize. So I think that's a positive change that came from the One Big Beautiful Bill that does allow you to get at least some credit for charitable contributions that you make. Now, if you typically make large contributions to charitable organizations in a year, either personally or via your business, maybe you're a mission-driven business. I know our business gives 10% of profits to charitable organizations each year. And if that's the case for you, you probably want to get strategic such that you can get the most credit for that on your taxes, which of course then allows you to give even more. And the third thing that should be on your end of year checklist is to be making sure that you have retirement accounts set up that you can contribute to. I am a huge fan of using retirement accounts to help your tax situation. This is a great opportunity to be able to still keep the money, right? But not have to pay taxes on it. So if you have any kind of traditional IRA plan, or maybe you have a SEP IRA or a solo 401k, you want to be looking at making sure you have that account set up by the end of the year. Now, in some cases, you may need to make those contributions before the end of the year for them to count. In other situations, you may be able to wait to actually make the contribution for this year and just ensure that you're making it before you file your taxes next year. But you want to know the rules for the specific plan that you have. And again, this is especially useful if you are in a year where you're in a higher tax bracket. Now, I actually have two different retirement accounts. One of them is more of a traditional plan where I get to deduct it for taxes now and not pay taxes on those amounts. And the other one is a more Roth plan, which is one where I do pay taxes now, but it grows tax-free. And I think it can be a good idea to have both of those and then decide what makes the most sense for you to contribute in a given year. Again, if you're in a higher tax bracket, then a traditional plan may be more attractive, but for some reason, if you have a lower tax bracket this year than you expect to in the future, it could make sense to go with a Roth. But if you're in a situation where you actually have a lower tax bracket than usual this year, maybe it just wasn't a good year overall, then contributing to a Roth may make more sense for you. And this is one of those areas where I definitely recommend talking to a financial advisor if you can. So those are the three main things that are going to make the most sense to do before the end of the year, because timing really matters. However, I have one more thing that you want to consider doing before the end of the year, more to save your sanity than to save on taxes. So my bonus tip is to actually pay off all of your credit cards before the end of the year. Preferably maybe like a day or two before, to make sure that those payments hit in the current year. Now, that is not required by any means, but let me tell you, when you're going to reconcile your accounts at the end of the year, you're going to be so glad that you did it. I know for me, trying to reconcile out my credit cards is a bear. My credit card statements don't match the end of the year. I'm trying to figure out how to make sure that everything was recorded properly. And when they are all zeroed out, it is so much easier. And in addition to paying off those credit cards, I highly recommend transferring money out of those third-party services and really trying to consolidate where your money is. So for example, if you have money in PayPal and Venmo and in all kinds of different places, consolidating that into one bank account will again make reconciliation so much easier. We don't want money sitting in no man's land or hanging out in Stripe. We want it in our bank account by the end of the year. As an accountant, I absolutely adore a clean balance sheet at the end of the year, and your future self will thank you as well. Now, if you're wondering what you should do at the beginning of next year, well, make sure to subscribe to the channel, because I'm going to be doing a video soon about what you should be doing as soon as the new year hits. And if you want to get a jump start on organizing your finances now, then check out this video next, where I walk you through how to get it organized fast. And if you're looking for affordable resources to help you get organized and or save on taxes, make sure to check out jamietrull.com/shop. Happy New Year, and we'll see you next time.